The monsoon has played havoc with construction schedules across the country. What's surprising is that it's not the industrial segment that's seen a drop for Pidilite. The Fevicol-Maker actually saw a sharp decline in the retail segment. Yash Upadhyaya is here to tell us more about it. Yash, I'm guessing the numbers disappointed.
Absolutely, Neeraj. It was a weak quarter for Pidilite. So, as far as the headline numbers are concerned, their revenues grew by almost about 1.5% on a year-on-year basis, coming in at about 1,800 crore rupees. Their EBITDA was almost unchanged over the previous year, while margins have come in at about 20.9% versus 20.4%. Their bottom line, that was aided by a deferred tax credit of about 25 crores in the current quarter, and also the lower tax regime which they have shifted to. So, that has reduced their effective tax rate to 8.4%, which has aided their bottom line. But the key, as far as the individual segments are also concerned, like you rightly mentioned, the consumer and bazaar segment, which is the largest business for the company, almost 90% of their revenues comes from this division itself, and there they have posted a meager 1.6% growth on a year-on-year basis. And what has supported or what has offset the slowing growth is the industrial segment, wherein they have managed a 14% growth. Now, one of the key numbers to watch out for as far as Pidilite is concerned is the volume growth in the consumer and bazaar segment. And for the first time in close to around 2 years that we've seen this number be in the negative territory. So in the second quarter, we've seen that the volume growth in the consumer and bazaar segment be at -1%, which is for the first time since the second quarter of FY18. And also coincidentally, their revenue growth, which has been the slowest in the same period. Again, it's important to note that in the second quarter of FY18, we had the GST related issues play out, as a result of which most of these companies reported a drop in their revenues, and that's the reason why a 2.8% growth in their top line is the lowest since second quarter of FY18, wherein they had reported a negative growth. Now, going forward, the biggest issue remains the outlook, and the management in its press release post the earnings has said that while they expect improvement going forward with respect to the demand conditions, well, there is clear uncertainty, and the most important thing that they are focusing on would be the volume-led growth for the company as far as its retail branding business is concerned, and that the majority of the growth that should come from the smaller towns and rural areas. So the tier 2 and tier 3 cities is where they should see the maximum amount of growth coming in from.
Okay, just wondering, have any of the brokerages slashed the targets post those numbers, or are we expecting those notes to come in only later in the day?
No, so they are holding an analyst con call, which would be later in the evening. So post that, we would see the brokerages come out with the reports. Initially, as far as the first cuts are concerned, we haven't seen any major downgrade with respect to price cut or any recommendation, be it a cut from buy to hold. But clearly, at the kind of valuations that it is trading, most of the brokerages, they are of the view that they need more details with respect to how the quarter has been, because we have seen margins improve, but only albeit marginally, despite of the fact that raw material prices have come off. We have VAM prices, which is the most important raw material for the company. That has been on the positive side, because crude oil prices, they have been largely benign. But the higher advertisement and promotional costs, that has impacted their margins, which has restricted the margin growth. So it could be an aberration for this quarter, and we would see it normalize in the second half. But we would be awaiting further details. We would be speaking with the management, obviously, as well later in the day. But they don't give any guidance. So that would be something that would be important to see if we could get something out of the management with respect to how the demand outlook is.
Well, maybe the analyst call would also do that. Our interaction should also do that. And at some point of time, we'll try and compare, albeit very small is Astral, but what this segment did vis-a-vis what Pidilite has shown, and try and see if this is a bit of a structural issue or restricted to one quarter or restricted only to Pidilite. Thanks a lot for that, Yash. Thanks for putting that into perspective. It's a stock that is likely going to react in the session today.